Welcome back to the Panther Business Briefing. I'm your host, Jayson Reed, and I'm joined here by my co-host, Baran Pourtahmaseb-Sasi. Now, for our third and final episode on the topic of oil and gas, we'll continue our exploration of the energy sector by turning our attention to one of the world's largest companies and then conclude with discussing the future of energy policy in the United States. In our previous episodes, we gained valuable insights from Dr. Ali Parhizgari on the economics and history of the oil and gas industry, as well as an excellent primer on the geopolitical and regulatory challenges that the industry faces with Dr. Mario Loyola. To start us off, here's Baran to tell us a little bit about the electric vehicles and technology firm Tesla.
Starting with their general corporate structure, Tesla's board of directors comprises mostly of outsiders, with a fair amount of years with the firm. While Elon Musk would technically be considered the only insider, being with Tesla since its initial handover in 2004, it should be noted that Kemble Musk, Elon Musk's brother, and Ira Ehrenpreis, whom is a personal friend with Kemble Musk, have been with the firm since 2004 and 2007, respectively. This implies a greater level of insider influence than would be seeming on the surface. As for the investor spread, insiders and individuals amounts to about 54%, and at that remaining 46% being institutional investors. While the major institutional shareholders, such as Vanguard Group, BlackRock, and State Street, are around 7%, 6%, and 4% respectively. Of particular note is Elon Musk's insider ownership of almost 13%. This effectively allows him as CEO to leverage his ownership as a source of influence against other shareholders and board members. When it comes to risk and return, Tesla's performance, both internally and in the market, lends to its reputation as being a high-potential, high-risk firm to invest into. Having a beta value of around 2.4 means that the stock price is about 2 times as volatile relative to the market, and having an R squared of 33%, showing there is a relatively weak, though positive correlation between the market and Tesla, one gets a better picture of how Tesla seems to operate outside the market in an attempt to chart its own course, combining independent performance with ingenuity. While Tesla's equity risk premium of about 5.4% meets conventional investor standards, the high beta further emphasizes the risky nature of investing in their stock. However, the firm's volatility could diminish the relevance of this premium, as fluctuations in performance may overshadow its expected return. In spite of the seeming riskiness of the firm in the market, Tesla's leadership is keen on ensuring regular government negotiations take place in order to secure subsidies, regulatory policies, and favorable tax shields, which likely are ways to help the firm better navigate through its tumultuous path. Another factor for consideration is that 54% of Tesla's revenues are generated from foreign markets. Besides the implied currency risks associated with foreign exchange rate fluctuations, the second largest market for Tesla products currently stands at China. Trade relations between China and the United States in the last several years has become the relentless subject among U.S. political figures and think tanks, which could lead to unknown developments in the near future and potentially impact Tesla's ability to enjoy its revenue streams from its recently developed market in China. This is further complicated by the explosion in demand for Chinese-produced electric vehicles, which may not have the same brand premium as Tesla-made vehicles, but have presented themselves as an appealing and economic substitute with almost paralleled performance capabilities. As far as Tesla's intent as a long-term investment experience is concerned, it should be emphasized that it does not have any dividend payout plan. Its primary efforts to generate equity and capital for growth is through retained cash earnings, adjusting activities to sustain positive cash flows, and through shareholder purchases of stocks. Essentially, Tesla's primary payout is in the form of appreciating capital. All this should not downplay assumptions for Tesla to eventually reach maturity levels of stability as a firm. Research and development is a continuous cause for expense of the firm so that they can maintain some form of competitive advantage over other EV manufacturers. This primarily takes the shape of creating an electronic vehicle boutique lineup, where products like the Cybertruck or their EV semi-truck line are intended to break into traditional diesel operating vehicle markets. While Tesla may not have the capacity to fulfill the volume of demand it generates, this too is a problem being considered for their strategic planning, as the creation of new manufacturing plants, the development of relationships to secure highly valuable material components for their batteries, as well as the implementation of nationwide networks of their iconic supercharged stations are ongoing developments which serve to either complement current Tesla customers as well as give confidence to prospective new ones. Ultimately, Tesla as a growth firm is a unique case. A large degree of its performance, both in terms of internal management and in the market, is tied to the activities of its charismatic CEO, Elon Musk. The corporate culture within it comprises mainly of long-term stakeholders of the firm whom not only have faith in the technologies they're developing, but also in the firm itself as a reflection of the CEO's personal ambitions. However, the seemingly erratic behavior of the CEO, namely in their engagement in cultural politics, results in periodic cycles of loss of confidence among employees and of the market, which is then re-established through a new wave of investors and brand loyalists. For these reasons, it would appear that Tesla has effectively cultivated itself as being an avant-garde and cutting-edge brand, which would serve to insulate it from trends in the general market or from the activities of its managers. This being said, Tesla is no longer able to enjoy its first-mover advantage as an EV manufacturer, as it did, say, in the last 10 to 20 years. Many other national economies, as well as many much more mature legacy brands in the automotive industry, have caught up with Tesla's technology and performance metrics for electric vehicles and even surpassed them in many ways. However, Tesla's ability to persevere in spite of competitors providing suitable substitutes to their product lines still seems to be largely driven by high-risk investors who have strong faith in the brand's long-term success. Due to the volatility of the firm, investing into their stock beyond short-term speculation invites high risk. For this reason, Tesla should be seen as a diversification asset for your portfolio to mitigate unsystematic risk rather than a primary investment.
Could you speak on what other, ways the government could kind of incentivize?
I think the government has really multiple incentives in this regard to help the consumers to switch or improve. Mm-hmm. At one end, you could look at the e-cars. Initially, most
tax
of
credit.
the e-cars, you had $6,000, $7,000, $8,000 tax credit. What else did you want? That was a very good incentive to sell those cars. Tesla was probably one of the best beneficiaries of that type of investments.
Right.
Then there are other home improvements. For example, energy efficient air conditions. They are the biggest consumption. They create the biggest consumption of electricity. So right. You go to a higher level efficiency air conditioners, you have higher and higher level incentives. And then there are window fittings. There are solar panel installations. Each one of them has some aspects of help that come from the government or from some institution. I don't have the details of how some of them are financed through that bond, but I have a feeling that a good amount of the money, which is from that bond, is channeled through these activities.
Yep, and the person we'll be interviewing tomorrow, I'm sure has plenty of insight on that.
Right.
And another thing, because you're of course a financial expert, we thought you might be able to talk about some securitized risk transfer products like the catastrophe bonds, right, and how that actually applies to the oil and gas industry, and how that is kind of paid forward the consumers.
For the gas and oil industry, I think those securitized products have rarely connected directly the industry with the consumers. Mm-hmm. I don't know of that many of them, Maybe I'm not informed in that regard. But then there are lots of other securitized products that the financial markets play with. They initiate it, they distribute it, they run over lots of other entities, but they don't seem to be initiated by the entities themselves.
Yeah, there's no,
Right.
there's no
So there is
skin in the
no
game, right?
direct integration of the two. It's not that, hey, I am an energy producer. I want to make your life easier, so I'm going to create this particular product to make sure that you don't pay me higher prices or lower prices 2 years down the line. No, it's not coming from the industry.
The
It is
speculator.
coming from speculation, forecasters, planners that are in the financial markets. And there are many of them.
Right, and
In the
they're affecting what
financial-
we pay at the pump. But they can, of course, take it into their own hands.
Oh, yeah.
One famous thing is just making your home more energy efficient.
Oh, yeah. That is a different aspect of
Yeah,
it.
could you speak on what the most cost-effective upgrades people could consider, given the local South Florida climate and housing market?
I may say that there are lots of efforts in order to reduce energy consumption. Lots of efforts, from solar panels to retrofitting to energy efficient windows. You name it, they're there. As a matter of fact, in Miami, for example, you will see a lot of houses with different types of windows these days. Some of them are financed, some of them are claimed to have been paid partially by the government as incentives to go through that retrofitting.
Right.
There are lots of alternatives to reduce the energy. Another aspect of it is to switch to e-cars, electric cars. But then none of these is without any controversies, I may say that.
Absolutely.
There are all sorts of controversial aspects that attach to each one of them. I mentioned, for example, electric cars. Electric cars were highly received, were promising a lot of what I call improvements on our day-to-day life. But then if you look at what is happening during the last year or so, you notice that our manufacturers are slowing down
Absolutely.
gradually, as if
Got some backwardation for
backing
sure.
right. Now, why? I mean, and the consumers are also learning, getting more educated to do this, because they look at it and say, wait a minute. If I go into an e-car, electric car, my cost is about 5 cents per gallon. I'm sorry, 5 cents per mile on the car. If I stay with fuel, it's about 11, 12 cents per mile. The consumers notice that, hey, wait a minute, I buy a car, and if I want to switch after 2 years, there is a steep reduction in the price of e-cars when you want to resell it. Because the buyer is very obvious in what is he or she buying, because he or she knows that the life of the battery is only 5 years or so.
Exactly.
So you buy that car, 2/3 of the car is already gone. With a fuel type of car, if the mileage is low, then you will say, wait a minute, this looks like a brand new car. So the price could be substantially more in the used market. But then on the other hand, they also look at the convenience of it. All these charging stations are in some places,
Well, and they're not free.
I know, they are problematic. They are problematic. When you look at their costs also,
Of setting the infrastructure up, you mean?
right, there are costs of infrastructure for them. In some places, that the land value, the parking area is very useful, is very valuable. They are not that easily operationally
You need a dedicated
available.
charging spot, right?
And then, of course, their cost, they also have their own cost. I mean, in some places they are free, but in some places you end up paying either by the meter or by the parking or by some other measures. So therefore, the consumers are also learning that, hey, wait a minute, the beauty that they were seeking may not be there. That's why I said each one of these alternatives are not
There's pros and cons.
are not absolute in the sense of positive rewards. There are some problems with them. But I don't want to come across negatively here. I may say that they are all improvements. They are all contribute to a reduction on energy.
Right.
But there are other problems. In the financial markets, we have the derivatives market, you name it, any product could be assembled if and only if there is at least some reward for those who initiated them, Okay.
Well, I think we can move on to our company focus, which was Tesla.
Okay.
I don't know if you've seen their earnings, but it was not impressive in this last quarter. So we've prepared a couple questions. Baran, if you want.
Right. So, Professor, one of the things that we were interested in as far as Tesla, we talked about the EV market and industry a little bit before, but is there anything you could say in terms of predicting, let's say, a firm like Tesla, which has already been existing since 2004 under its management of Elon Musk, that trajectory that it's had in the last 20 years, do you think this has been putting it in a direction of success, or are there variables and changes in the environment that could maybe be a disaster story waiting to happen for either them or electronic vehicle industry in general?
Right. I may say that I love that question because it looks it's a forward-looking type of inquiry to see as to what may happen or where we may be going. This company has been a success if you look at it from the beginning of it. And of course, you have to give them the credit that they were the first one who basically brought the product on the market. But then at the same time, the company has not been without much controversies, particularly with the way that the CEO of the company sometimes governs or acts, or the transactions that the board of the company or the CEO of the company gets involved with. So sometimes it shakes the market. Now, you could say that some of them are intentional, some of them are publicity, some of them basically just to make the news. It's a part of the company. Making news quite often is not that bad if you are trying to sell a particular type of potato or soap or detergent, Anyway, so all is said, I may say that the future of the company, in my opinion, will depend on the geopolitical dimension of what the United States and China may do in the years to come. I give you one example. The Chinese e-cars are highly competitive. I'm not saying exactly in terms of quality, but we always have had the privilege to be known that anything produced in the United States is having a better quality than anywhere else, but that's taken for granted. But if those imports are allowed into the United States, they create a sharp competition with anything produced over here now, and Tesla is one of them. It definitely will get affected, definitely. But right now, when I say it depends on the geopolitics of the country, right now I think the United States is talking about putting a tariff of 100% on e-cars, 100%. So a $20,000 Japanese Chinese car will arrive into the United States. That's $40,000. So it pretty much wipes it out. There is no market for it. So, but then I should say that the governance of Tesla is very well aware of it. That is why they should engineer. Then when it comes to the market, I may say that I believe in the market. Temporarily, the market may overvalue or undervalue a particular product. And in terms of this product, the market realizes what is happening. If they realize that the inflow of Chinese or other e-cars into the United States are open, then Tesla will lose a lot of its value. a lot of its, I should say, valuation of it. Not to mention the stock price and all the other things, So these are, and then also there are other issues over here now. How the administration and how all the other decision makers in our country probably pave the way for e-chargers, for some other facilities to basically address the problems that we have with e-cars. That's also another venue. I have learned that some of the e-charger facilities are astronomically expensive, and I don't know why. The technical know-how there are 3 levels of charging as far as I know on the surface. L1, L2, L3. L3 is the fastest one. But why some of them cost so much, I don't know. I mean, if that happens to be the case, then I won't be surprised if someday the e-chargers turn out to be a lot more expensive than what they are today. See, right now we may be finding some of them free, but then I have a feeling that there won't be any free ones in the future.
Yeah, I remember at some point one of the marketing strategies for Tesla was that if you bought a car or pre-ordered a car, you locked into, let's say, or grandfathered into free charging access at Tesla stations, but after a certain point, that was no longer a
available, right?
Incentive available. So,
fully agree with you. At the very beginning of an introduction of a particular product, there are all sorts of incentives, we call them goodies, that come along with it. But as time goes on, all those will disappear. And if the product is successful, I may say that sometimes innovations may cause the product to drop in price. But unfortunately, it has not happened with Tesla yet. You would have expected that the prices of the e-cars after 5 years, 6 years, 10 years of production may probably start to go down. No, we don't see that much, And it is also becoming a little bit more mixed up with all other things that we try to put more software on them, ranging from a little bit privileges here and there to driverless cars and things to that effect. So it's making the situation a little bit more complicated.
Right. We talked about, as far as the oil sector was concerned, you mentioned this unignorable political dynamic that was involved. Would you say that as far as the electronic vehicle industry is concerned and the market and the different trends that the economy is moving towards for EVs, we could expect to see that similar kind of political influence beginning to affect how decisions are made, countries or companies deal with one another?
Regrettably, I may say the answer is yes. The reason why I'm saying that is because I am a student of history, more or less, given my age and my background. A lot of things like that happen. But right now, we are at a point that we really don't know how much effort will be put into place to support some of the activities that the current administration has undertaken. Okay? Starting in November, I don't know where we will be after November 4 or 5. Then, if the policies change, the situation in most of these companies will change, particularly in the energy sector. In the energy sector, I won't be surprised if all of a sudden we realize that, oh, wait a minute, we are going to issue contracts for digging oil here and there. We don't want this. All those things could be the possibility. So therefore, it's not always, going back to our earlier comments about the energy sector, particularly oil, has got a huge dimension which is linked with politics. No matter what, the same thing applies right now, no matter what, And this gets aggravated with all the other, I should say, innovations or improvements that are not yet known or fully known. For example, just last week, I learned that Google is going to come up with 3 more new innovations related to AI. I don't know the exact terminology they are using. They call them AI programs, AI text, and one more that I don't remember. These are going to create huge improvements in the way that you and I do certain things and how the industry could possibly adapt to them. Now, I learned that was one of the executives of Google who basically posted those comments, and then it was removed, but somebody else released it, and I learned from those postings. So talking about innovations and future developments, it's very hard to basically make a judgment. But I may say that the political dimension and the decision that we are going to make starting in January 2025 is going to have a big influence on where we are going to basically move on,
So, that's very true. And as you mentioned, as a CEO for Tesla in particular, Elon Musk is very good at negotiating with the governments, regardless of who's in there, so that that influences the regulations in a favorable way for maybe Tesla specifically, but the electronic vehicle market in general. So that being said, you mentioned that sometimes there's some controversies and scandals with how the CEO for Tesla conducts themselves. Besides that, Tesla does seem to have, as you mentioned, also a very high premium for its market performance. And would you say that this is a sustainable premium that they've been able to achieve, or is there some other variables that could explain why this firm that maybe doesn't always have the market's confidence seems to outperform expectations a lot of times?
I may say that I expect that other competitors may catch up. Generally speaking, we have a few innovators, but they will never stay in front of all their innovations forever. I'll just give you one example. GE, General Electric, for 50 plus years was the only company that was listed on Dow Jones. Finally, it came out of listing. It's no longer listed in Dow Jones. That's the best we had. So therefore, I'm not saying companies live forever, but then they will be replaced. There will be somebody else or some other innovators that may come up and bring something else to the table. And then when a company makes a lot of innovations and is in front, there are studies done that reveal that over time, they become sort of tired of themselves. They sort of give up. They sort of become too much confident of what they do. And to that extent, they create failures for themselves. And over time, they gradually diminish their privileges that they initially had.
Say when they're far into the mature stage of the business cycle.
Right. So it's like a business cycle that just you move up, you climb Mount Everest, but then sometimes you're not going to stay in that cold area all the time. You're going to come down. That has been historical trends on most companies. So my forecast is that we will have a lot more innovations. But I should also say that I praise the company in terms of catching up with the latest developments, particularly because the company is not only in e-cars. The company is in a lot of other activities, satellite, this, that. And they have had a lot of privileges in their associations with the U.S. government. They have had a lot of benefits.
Especially Cape Canaveral, yeah.
I know. They have had lots of good negotiations, as you mentioned, with the U.S. government in order to get help here and there. But how much of those could continue in the future, I am not really able to forecast or make a judgment.
Yeah. Going back to maybe the political side of things, we know that some countries, they have what we refer to as national champions. For example, in Russia, Gazprom is considered a extension of the Russian interest wherever it operates. So maybe it would be safe to say that Tesla or the emerging electronic vehicle industry in the United States naturally would have this kind of close relationship with the government, the U.S. government, that is, so that it can succeed domestically but also make influences internationally as well.
I may say that the company has a direct relation with the government. They are not aloof. They are not completely an outsider. They are pretty much linked. But as a manufacturer, they are still standing alone, let's put it that way. But then when it comes to their policies, in regards to their cooperation with the government, there are lots of indications that they have been very well cooperating with the U.S. government, particularly in terms of providing intelligence, satellite systems, and things to that effect.
And that concludes our discussion on the firm Tesla with Dr. Parhizgari. Up next, we have Dr. Loyola to break down one of the biggest issues with domestic energy that we have recently faced and will likely continue to face in the coming years.
Let me say that the U.S. right now is facing a major energy scarcity crisis because it has gone down somewhat similar road to Europe, and energy prices have already risen 30% since the beginning of the Biden administration. PJM, which is the regional transmission organization that provides electricity to like Pennsylvania, Ohio, West Virginia, those Midwestern, those Mid-Atlantic states, just had a capacity auction in which prices soared by 1,000%. That's capacity auction is how much it costs to get people to producers to promise to provide electricity to you next year, right? So it's like a component of your electricity bill. And what we're seeing is just red flags going up all over the place that the grid has suddenly hit severe constraints on its ability to expand. One of them is the Inflation Reduction Act, which is causing all of this free solar electricity to be dumped on the grid in the middle of the day across many parts of the country, as a result of which baseload generation, coal, natural gas, even nuclear, cannot recoup their costs. So the Inflation Reduction Act subsidies for solar have frozen investment in new baseload capacity in most parts of the United States, not in Florida for a reason I'll explain in a second. And that's very serious because this is at the same time as electric grid operators are prognosticating the most rapid increase in demand that we've had in 100 years from electric vehicles, from AI, data centers. They're expecting demand to grow by 15% at least in the next 10 years, while coal plants retiring and stuff, the grid is going to contract by 15% in the next 10 years. So we're facing a gap of 30% of grid capacity over the next 10 years, which is we're not going to get anywhere near that because electricity prices are going to start going through the roof if there's even a gap of 5%. And so what are we going to do about that? Don't know. But if you look across the country right now, you see, 30 years ago, residential electricity prices were basically the same everywhere. Now there's been a huge divergence. California pays more than twice as much for every unit of electricity as Florida. There's a lot of divergence across the country, and the pattern is very clear. It's those states that have adopted renewable portfolio standards, clean electricity standards. The states that have, the really strong correlation actually is whether your legislature and governor are Democrat or Republican. If your legislature and governor are Democrats, your electricity is twice as expensive as if they're Republican. And that's somewhat a function of higher income in those states, but it also explains the fact that you've got that people in, Florida is not a low-income state, and it still has a very cheap electricity below the national average and far below California. And the reason is that they've avoided a lot of these in Florida, they have avoided a lot of these gimmicky, clean kinds of incentives. Yeah. And there's another thing which is very interesting. It's very complicated. It's taken me a while to understand it. But in most of the country, you have what are called regional transmission organizations, which, unlike vertically integrated electrical utilities, just go out into the market, and anybody can be an electricity producer. If you've got a plant up and running, and they have to take whatever electricity is being offered at whatever time of the day that is cheapest from whoever's producing it. Mm. This was supposed to be this was a Clinton era reform.
Yeah, I remember something like distributing your unused energy sort of thing, or contributing it to
right. And this was supposed to be like a smart grid thing. But it's turned out that which was a major innovation of the Clinton administration, Florida and the western states outside of California are the two areas of the country that still have vertically integrated utilities. And the major difference that we're going to see over the next decade is that like I said, the interplay of the Inflation Reduction Act subsidies with the market structure of a regional transmission organization is absolutely toxic. Because what is happening is that it's hitting the one part of the RTO system that is actually market-based is when they have to buy electricity. And the IRA is coming in and is subsidizing all of these renewable guys to dump it on the market for free or even for negative prices. Because the solar developers are making their money from the government subsidies. They're not making the money from the market. So they're coming in, and now all the actual, base load electricity produced, which are not the variable, base load means that it can operate consistently, right, across all day long, 24/7, all year long, as opposed to solar, which is like sometimes it's available, sometimes it's not. There's no way to predict when it's going to be available, and you need all of these backup power plants for when it's not available. And it makes everything very expensive. And so as a result, the base load generators cannot recoup their costs because they lose money in the middle of the day. And so there is no new nuclear being built anywhere that there is a regional transmission organization. Not one plant. Or natural gas. Because why? Because they can't show a return on investment, because if they operate, they're going to lose money.
It's a bad proposal.
With all these solar guys. So the RTO areas, even Texas, which for a long time had the most efficient electricity market in the world, these places are headed for a major, potentially catastrophic energy shortage that Florida will be shielded from, because Florida can still, if you're a nuclear plant or a natural gas plant, you can still reach an agreement with the utility that guarantees you a rate of return on your capital investment. Mm-hmm. So what does that mean? That means that electricity is going to be very expensive in Florida, but there won't be shortages, because at least they're building new capacity. And so you're going to be paying, like I have a friend of mine likes to say, you're going to be paying for the same electron 5 times.
But
you're paying for it on your electricity bill. You're paying for it in the capacity market. You're paying for it when you pay, or your children pay for the Inflation Reduction Act subsidies. You're paying for it. You're getting. If you really understand your electricity bill, you will eventually vote whoever's in charge out of office. Or definitely come out against the utilities. But that's a very important. So I think, again, once in a while you come across an incentive program like the rooftop solar one that you mentioned that sort of works. But I think people need to really temper their expectations of the government's ability to beat the market when it comes to innovation.
And that concludes the third episode on our theme of oil, gas, and the energy sector. Tune in next week, where we'll be sitting down with FIU's College of Business's Dean, Dr. Harden, to talk about the residential housing market.